Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update video is for Tuesday, May 26th through Friday, May 29th, 2009. Well, as you guys know, this is the holiday Memorial Day weekend, and thus Monday the markets are closed. So therefore, the Tuesday video is obviously for Tuesday through Friday for this weekend. And what I want to talk to you guys a little bit about today is the interesting things we saw in the markets last week. Now, there was a lot of it. First of all, we'll have to talk about Friday's action. Now, Friday the market closed lower by about 15 points. The NASDAQ down about 3, and the S&P 500 down about 1.3 points lower. Very, very flat day, very light volume. Lightest volume day of the year. Now, that's pretty much expected. Earlier in the week, we had the second lightest volume day of the year. Now, officially Friday was the lightest volume day of the year. And you can see how going into a holiday weekend, there's going to be this light volume characteristic in the markets. Now, the interesting thing about Friday was we actually saw a late day rollover, and I was very, very proud of this rollover, and I'm going to discuss why. Now, you guys know I've been a proponent, and In the Money Stocks has been all about giving the average investor, giving the average trader an inside track in understanding Wall Street's games, the government's games, the Treasury's games, and the Federal Reserve's games. What I liked about Friday was this, and this is one of the most unique things, and I was very, very impressed that this happened. Now, granted, light volume, you can't take it too seriously, but at the same time, the interesting thing about this was going into Friday's action right here. Alright, see on the charts? And again, this is the intraday 10-minute candles SPY chart. You can see right here at 3 o'clock, you almost broke out to a new high, double top. Notice the double top right here on the green line. You closed back below, and actually from that point on, you started to sell, and you basically sold from 3 o'clock right into the close. Now, what's so unique about Friday was that the government tried to pull another push-up on light volume type maneuver by having President Obama come out on live TV and do his credit card signing bill and pump up the economy a little bit, give some positive words. And the interesting thing about that, again, folks, was this, is that when he signed that in, the fact that he came out at 3 o'clock, think about that in the terms of publicity. Alright, he's doing it, think about the time-wise. It's literally Friday, an hour before the markets close on Memorial Day weekend. I'd say 75% of all traders have already left for a long weekend, if not, didn't even come in for Friday morning. And it's almost like you're slipping it in there at the end of the day on a Friday at 3 p.m. Very, very fascinating to think about. Now, why would he do that? Well, they've been doing this for quite a while. In fact, the best kind of feeling of this, or the best time this was done, was when Wells Fargo on the last holiday weekend came out on Thursday morning. Friday was off. Alright, I believe it was Good Friday, and Wells Fargo came out on that Thursday when it was very, very light volume and said something positive about financials, and their earnings were going to be blowout. You guys, I'm sure, remembered. We had a huge, huge rally. So, in my opinion, to see this at 3 o'clock is not surprising at all, but the fact of the matter is, instead of pushing the markets up, because light volume, remember, when there's light volume and you get some positive words, you get Obama to come on TV, of late, we've always had, for the last 2.5 months, we've had a positive move in the markets. Okay, so having said that, you kind of expected that, and I think the administration, it has been one of the most impressive in understanding the markets and when to come out and say things in history, in fact. They've really understood what the markets need, how to manipulate the light volume aspects of things, and really become key in that realm. So the fact that he came out at 3 o'clock is not a surprise to talk. The more impressive thing was it started to break out and then it failed. Now, one thing I will tell you, one thing that my traders in the chat room know, and by the way, you can all become traders or come learn in the chat room at any time. One thing they all know is that the markets will rise or fall on something until it becomes normal or they expect it. Once it happens too much, it's almost like pushing your luck or being too greedy. Once that happens, it's not going to react the same way. And that was the first little inkling on Friday afternoon that I thought something was up here. So you saw President Obama coming on TV, speaking, and then the markets try to break out and then they fail. And notice the volume increase all of a sudden starting here as well. Now, it wasn't a lot of volume, but still, it was more than we saw pretty much all day. And notice the candles, all red candles here, except for this one in the middle at 3:30. Now, the markets sell again here and sell second candle, and then interestingly enough, another rabbit is attempted to be pulled out of a hat. We got word through the grapevine that positive words were issued by Morgan Stanley on some of these financial firms, especially Bank of America. Now, Bank of America, BAC, started to run here because they basically got an upgrade. I believe it was like $32 a share upgrade. I don't know what it was. Regardless of it, it was positive. Now, why on earth would they come out at 3:30 Memorial Day weekend, dead volume, no one paying attention, and do this? Again, the light volume has to be analyzed. You have to understand how key it is, how markets can really get a boost on light volume, and the attempt to continue to float the market up and understand the psychology of the markets is being done absolutely to a T here. All right, now again, watch for this type of event. Watch for possibly Tuesday morning. Do we see anything more where it kind of happens? All right, because Bank of America did start to run, and notice the markets. Let's go back to the spiders chart here, showing us really what happened. And you got a little uptick in the markets, but sure enough, just like Obama coming out on TV, this market starts to fail and roll over and come back down. So what this is telling us again is that the market is getting old of this, getting tired of this attempt to float the market up. And as soon as the market starts to expect it, it's not going to work. It's just like anything. You know how we preach, how everyone, once everyone says, well, the market rises on, Fridays and Mondays, as soon as everyone expects that, or as soon as the market starts to do this, everyone does it, it's not going to work. All right, and you have to understand that from a psychological point of view. But sure enough, the beauty of this is that kind of news comes out, and even on light volume, it doesn't even hold up the markets, and you still get a hard sell. All right, now I'm going to go into the technicals of the charts. That's just something I found extremely important, and I think it's something we have to watch now, is that the government and the Treasury and the Fed and these financial firms are going to have to come out with something new. The same old is not going to float this boat up anymore. That's really the key. Now, can they come out with something new and spontaneous? Absolutely. All right, trust me, they are very, very smart. They can do it if they really try and if they want to. So we'll have to watch for that next week. Now, on the technical side, folks, every line here, this one, this blue one sloping down, this pink one here, and this yellow one, they're all key levels, and even this one right down here are all key levels on this market. I want to show you. First of all, see how beautiful this blue one was? See how we fell all the way down here, and it was the high point right here, and then we bounced through it, and we came back, retested it here. See, we broke right there, came back, retested, then rose up to the green trend line and fell. Look at where we closed. This line I got by connecting the previous day's highs. Take this high, and connect it all the way down. What does that give you? This point in the chart. Stretch it right down, continue to follow it through, and look at how many key points. This point today, Friday really, was the key one there. You can see how finally we broke above it, we retested it, then rallied, then where did we end? Right on that. So watch that in the coming week. Watch this trend line. In addition, you can see how the green line right here and this one right below, this light pink one, are two main levels. I want to show you where we get those from. Right here. And you see the top there and the pink one, the lower side. Where did we get that even before? Go back here. All right. And you basically have gap window, the top of that morning right there. You can connect it even further back. I mean, these lines go on forever. You can see right here, the pierce right here. So you can see how this is a big, big level in this market, no doubt about it. The pink line as well right here, the gap window. This was the big reason why this light pink one right here is so big. Look at the yellow one below that we have in our charts. It's gap fill. This is just showing you why these levels are so key, why you have to understand that. This ultimate light one down here, if I stretch it back, you'll see exactly where that comes from. If you go back a week ago Friday, it's the actual low right here. You pierced it and bounced off. What did we retest there on the bottom side? Right down there yesterday. And, well, actually from 2 trading days ago, we tested that down to the downside. So these levels are going to be very, very key here, folks. What I'm really watching, and again, I said this in last weekend's video, and it held so true again. I said watch 88.50. This is exactly what I said in the last weekend's video. Go back and check it if you want. Watch 88.50 for a close below it. You get a close below it on a daily basis. I think there's more downside in this market. You can see how we were below it briefly. Here's 88.50 briefly, and then they saved it into the close of the day. So you didn't close below it. What happened after that? They kept us above on Friday as well. So this is just something you really have to pay attention to. 88.50 there is so clutch. All right, on the downside on the S&P 500, really watch that 870 level, I think, as well. Should be very, very good support at that level. We'll see if we break it and what happens after that. The keys will always be discussed in the nightly premium videos to our premium subscribers. All the key data, everything that you're going to want to know for the coming day. Getting the newspaper today, which is tomorrow's newspaper today, that's really what we're out to do. Help guide everyone and help them truly understand the markets. Alright, so we do hope you come out and check InTheMoneyStocks.com. Look at the premium services. Look at what it includes. Fantastic videos, daily market reports with key numbers, hidden gems. By the way, the last 2 hidden gems, I'm going to be putting those out come at the beginning of this next month, in the beginning of June. The last 2 hidden gems that I put out for this month ran 100% in 1 week each. each were up 100% in one day. Fascinating stuff. Technical Tactic will be coming out. You name it, they'll all be out, and that's all inclusive in the Research Center. Chat room is always fun as well. Come join us. We hope you check us out. Take care.